Imagine a company that doesn't make money. A company that loses billions of dollars every year. And yet, at its peak, was valued at $47 billion. This isn't an exaggeration. It's not a classic scam, and it didn't happen decades ago. It happened recently, and the company was called WeWork. Today, I'm going to explain what WeWork actually did, why investors believed it was worth $47 billion, and why that entire valuation collapsed almost overnight. More importantly, we'll look at the lessons this story leaves behind for investors, startups, and anyone who believes a great story is enough to build a great business. Let's start with the basics. WeWork was not a tech company. It didn't build groundbreaking software. It didn't own revolutionary patents. Its business model was actually very simple. WeWork leased large office buildings on long-term contracts, renovated them, and then rented out desks and small offices on short-term agreements. That creates a very specific risk. WeWork was locked into huge fixed costs for many years, while its income depended on customers who could leave at any time. If the economy was strong, it worked. If demand dropped, the losses were immediate. This model doesn't scale like software. It doesn't get cheaper as it grows. And it doesn't magically become more profitable over time. And that's where the real problem begins. This brings us to the central figure of the story, Adam Neumann. Adam Neumann wasn't a traditional executive. He was a powerful storyteller. He didn't talk about leases, margins, or balance sheets. He talked about community, about purpose, about elevating the world's consciousness. He didn't sell office space. He sold a vision. Investors and employees were told that WeWork wasn't a real estate company. It was the future of work, a global platform that would change how people live and work. And when a story is compelling enough, people stop asking hard questions. Over time, WeWork stopped behaving like a normal company. There were massive events, loud music, emotional speeches, and celebrations that felt closer to rallies than business meetings. Working at WeWork wasn't just a job, it was an identity. Questioning leadership decisions was often seen as a lack of belief in the mission. And when a company discourages critical thinking, mistakes don't get fixed, they grow. At this point, numbers mattered less than belief. Narrative mattered more than reality. Now we get to the most important part of the story. The $47 billion valuation did not come from profits. WeWork never earned that kind of money. That number came from private valuations, which are estimates based on what investors believe a company might be worth in the future. And here's the key mistake. Investors valued WeWork as if it were a tech company. They assumed each building was a node, each tenant was a user, and the company would scale like Facebook or Google. But that assumption was wrong. Buildings don't scale like software. Every new location required massive capital. Every expansion increased risk, and losses grew alongside revenue. So why did the valuation keep rising? Because of one major player, SoftBank. SoftBank poured billions into WeWork with a dangerous philosophy. Grow first, fix the business later. Every new funding round set a higher share price. That higher price inflated the valuation, even as the underlying business deteriorated. It wasn't real value. It was expectation stacked on top of expectation. In reality, WeWork lost more money the bigger it got. Each new office required upfront investment, ongoing maintenance, staffing, and years just to approach profitability. There was no magic scale point, no moment where the model suddenly worked. The issue wasn't time. It was the structure of the business itself. In 2019, WeWork prepared to go public. And everything changed. Because going public meant opening the books. When analysts saw the numbers, the illusion collapsed. Massive losses, chaotic governance, serious conflicts of interest. Investors realized the truth. This wasn't a tech platform. It was a poorly managed real estate company. Confidence disappeared, and the valuation imploded. WeWork fell from a $47 billion valuation to a fraction of that in just weeks. Adam Neumann was forced out, but walked away with a massive payout. Thousands of employees lost their jobs. Billions of dollars vanished. And the lesson is simple. A great story can hide a bad business. Charisma is not a substitute for profitability, and growth does not automatically create value. The next time a startup claims it's going to change the world, ask one question: how does it make money? And when?